You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, inflation, economic growth slowing, and very uncertain times, volatile markets, geopolitical issues, war, etc. You got to rethink your plan for success. And you're about to hear from somebody who basically has done it. He has built up a real estate portfolio of more than $60 million, monthly cash flow, $800,000, and he's now teaching you how to do it. His name is Jennings Smith. Jennings, great to have you on the show. So, uncertain times, really, rising interest rates, rising inventory in real estate, and apparently in many places, many markets, rents are peaking and even dropping. Is this a good time to be investing in real estate?
Yeah, well, thanks for having me on, Kerry. And I'm going to focus mostly on commercial real estate, which is my forte. But I think that real estate is one of the best ways to protect ourselves from inflation. And that's because you're able to use debt as that lever for you versus eroding away at your savings where you have no leverage. Like I think about the deal we just did, and we had to put down maybe $2 million for the down payment, and we did our value add. We refinanced it. It appraised for $14 million, of which, a lot of that is debt. But we created a equity slug of about $4 million in less than 2 years. And so you're talking about 100% return on the money versus, just a 1-for-1 return that a lot of times you can get in stocks. And if the money's just sitting around, then it's obviously eroding. And this is a great time to get into multifamily and real estate because people understand if they just leave their cash sitting around, it's going to erode 9%. Last year eroded 9%. It's going to continue to maybe even get worse. I mean, I was listening to the episode with the guy from Chile talking about how his country did like 1,000-to-1 reverse split on their currency. And, when you're in a hard asset, you're pretty protected in an event like that versus if you're in cash or stocks or, who knows what that valuation is going to be.
Okay. So, right. When you look at it, the leverage, all that definitely sets real estate apart, plus tax advantages, et cetera. And, they always say, when was the best time to invest in real estate? And the answer is 10 years ago. When's the second best time? Now. But you got to take a little extra care here, don't you?
For sure. I mean, there's no doubt that rates are rising, and real estate is definitely it's gone on a meteoric rise the last 2 to 3 years, and it's hot. And we're seeing those prices cool off a little bit, 10%, maybe even 20% in the commercial space. But we're still not seeing like that drastic fall off the cliff like we saw in 2008, 9, 10. And I personally don't think that that's going to happen. I think that a lot of people got locked into really attractive debt. They're not forced to sell. It's not the same sort of scenario where they were in, an adjustable rate mortgage that they couldn't afford anymore and they had to liquidate it. They had no equity. I mean, everybody that's been buying for the last 2, 3, 4 years has had to put down substantial down payments, 20, 25, 30%. My debt, most of it's locked in at 5 and 10 year rates. And so I have a time horizon to be able to allow inflation to work for me. So I'm encouraging my students and people that follow me, don't sit around waiting. Like, I'm going to wait another 6 months. I'm going to wait another 12 months. I'm going to see what happens. But to be actively looking for those creative deals, those non-retail price deals. I never would encourage somebody to pay top dollar retail. That's not my game. But to sit there thinking this apocalyptic event is right around the corner and you're going to be able to scoop up commercial real estate for pennies on the dollar, I don't see that. Because I mean, I've been investing in real estate for 8 years now, and somebody has always been spouting that narrative. So I'm just not convinced that that's the case. I think a lot of people are locked into debt with their primary loan for 30 years at 2.5%, 3.5%. They're not incentivized to sell. They don't have to sell. So why would they?
But it does look like there is more inventory coming onto the market. I mean, for the past 2 years, 3 years, the cry has always been, we don't have enough inventory and way more buyers than sellers. Now it looks like it's coming more into equilibrium, doesn't it?
Yeah, I mean, I'm seeing that with multifamily. There's definitely more deals coming across my desk. Sellers are a little bit more creative. However, I still have not seen that massive motivation, right? They got, myself included, right? I'm a seller as well. When you're a buyer or seller, you're always looking to trade something off, acquire something, and you get spoiled, right? You have this vision in your mind of what your property was worth in 2021 or even the beginning of 22. And a lot of sellers are not willing to slash and take a much cheaper price unless they have to. You know, they've gotten into a 2-year bridge debt, their loan is maturing, they have to sell, and the numbers don't pencil out at the new rates, right? The debt doesn't work at 6.5%, 7% like it did at 3.5%. And so they're having to either lower or they're having to get creative, right? I'm seeing more sellers being open to seller financing. I'm seeing them being more open to mezzanine financing, right? The secondary part of the loan, or investing in your deal with some of the profits so you don't have to raise as much capital and giving you more time to pay them off so they can still get that price that they want.
Okay, so somebody comes to you in your coaching program. They want to get into this game. What do you tell them? How do you qualify them? And how do you get them moving in the right direction?
So the first step is people are in my Facebook group, which is my first million in multifamily. My first million in multifamily, there's 25,000 people in there. And this is for people that just have a general interest. But who I'm looking for and who we can help the most is somebody that they're a single family investor typically. They've got some single family rentals. They've got a few duplexes. And they see that this is not going to accomplish their goal long term, right? If they want to do 100 units or 1,000 units or build $100 million portfolio, that's going to be really difficult to do one single family house at a time. But they already believe in real estate. They like it. They understand the basics of it, and they see how it can work in their favor, and they can close deals. Right? Some people they're just not cut out to do this. They don't have the risk tolerance. They're not going to get after it, build those relationships, raise the money. And so those I turn away. If you've never closed a deal, if you haven't owned your own business, you should probably start with single family or maybe buy a mobile home, something like that. But if you've got a track record, then we bring them into the deal room, which is the paid group. And that's where we start coaching them up into buying their first unit. And I try to encourage people to do like a 12 to 24 unit if they want to be the main general partner. And if they want to just like raise capital or be an ancillary part, they can get into a larger deal, but they're probably not going to grab as much equity in something like that.
Okay. And where do they find the deals? Where do you find the deals?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper gold early stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
So deals are found mostly through brokers. And I know that sounds a little bit maybe contradictory, because you look on LoopNet or Crexy or these websites where deals are listed publicly, and the numbers typically don't pencil out. They don't look good. At least for the last couple of years, they haven't. And so when someone's main source of deals is just, I'm going to go on LoopNet and look, it's going to be hard for them to find a deal. But if they can build a relationship with those brokers are full-time jobs to call apartment owners such as myself and say, hey, if I brought you an offer, would you want to sell? Are you interested in selling? What price would you sell? And they're trying to generate off-market deals that they can take to market. But most brokers, before they take them to market, they'll call their 10, innermost circle and say, hey, I got a deal coming to market. Do you want to buy it? And they're incentivized to do this because now they can get both halves of the commission. So they're very incentivized to try and sell it before they bring it to the full public listing. And so that's often where most good deals get snapped up, because somebody such as myself is seeing that before it goes to Crexy or LoopNet and is making an offer and getting that thing under contract. And it never, the common investor never even sees that deal. So that's what you have to do, is you got to build your inroads with these brokers, build your reputation, follow up, and that can generate a lot of, and that's just one path, that can generate a lot of deal flow for you just with 3 or 4 good solid brokers.
So that's like the pocket listing concept. So even though you might not want to buy the deals on LoopNet, you can find the active brokers there and start to build a relationship.
Absolutely. Yes. Okay. Absolutely.
All right.
And then,
go ahead.
The second way is look around, right? Look in your own hometown. Now, if you live in downtown LA or something, it's probably not too feasible. But if you live in a town where you know the area, right? You know what areas are growing, and you see a property that maybe it's a little overgrown, maybe a couple windows are boarded up, or the trash is overflowing from the dumpster. That's probably somebody that's not super thrilled with their property. And a lot of times that number on the sign is them, or it's the property manager who knows them, and you can generate a conversation. I've bought hundreds of units by just calling the number on the sign, talking to the owner, and hitting them at the right moment where, I'd entertain an offer. It's not on the market. And now you're in the driver's seat with them. You're the only buyer, and they're going to be a lot more open to negotiation, seller financing terms, seller carryback terms, and getting a deal done versus being in this huge bidding war with 10 other buyers, call for offers, and you're competing against hedge funds out of New York to try and to get a deal.
Right. All right. So financing, obviously, that is a major requirement of any deal you're going to do. And
for sure,
when you start looking for deals, should you have your financing lined up already, or how do you work it?
Well, when you're talking about financing, you mean the lender, or you mean the equity as far as the down payment?
Yeah.
Both. Yeah. So as far as the lending, that's really not that big of a problem if you're plugged into a network. So one of the reasons I created the deal room was to put multiple loan sponsors in there. You're not going to go out there and get a $4 million, $5 million loan on your own if you don't have, 1, the net worth, 2, 10% of the loan in liquidity. So if it's a $4 million loan, you got to have $400K at least in the bank beyond your down payment. And then you also have to have experience. You have to have experience in operating multifamily. So it's not realistic to think you're going to go out there and take down your first deal, qualify for this loan, and close it, even if you had the down payment. So what I aimed to do was put together a group of loan sponsors who are looking for people that are out there hustling. They're grinding, they're finding deals, they're raising money. They just need somebody to help them connect on that loan piece. And so we connect with people on, sponsoring loans, and there's probably 8 or 9 people in my private group that I've given them like a complimentary access because I know they can sponsor deals, and they may want to partner with somebody that maybe it's in an area I don't want to be in, or I just closed the deal and I'm not ready to acquire something else. I don't want to be the bottleneck. I want them to have a lot of options to be able to close that deal. And so, yes, to get that lending, you're going to need a loan sponsor, and you're going to need to build a relationship with somebody that can help you qualify and get that loan. But if you find a great deal, finding a loan sponsor, if you're in the right circles, is not difficult. There's plenty of people out there that are happy to sign on that loan in exchange for some equity in that deal.
Okay. And that's what it's about. You got to make the deal. It's one thing to talk about it. It's another thing to actually get it done. So what's your best success story with the deal room?
So we just closed the deal last Monday. So like a week and a half ago. And it was a guy who, he had a few rental homes and he had, I think, a quadplex, and he located a 34 unit in Ohio. And he brought it to our Tuesday call. So Tuesday we do live underwriting, and he brought it to the Tuesday call. I went through it with him, and it looked great. It looked like it could be a great deal. And I live in Charleston, but I was in Ohio at the time visiting my wife's family. So I said, I'm 15 minutes away. I'm going to run by there and check it out. And because a lot of times things look good on paper and they don't really look good in person.
Yeah.
So I ran by there, new parking lots, new roofs, fresh paint, nice cars, 100% full. It looked like a great deal. And so I called the guy and said, hey, I think this is a good deal. Would you like to, you should probably close this deal. And he said, great. And I offered at that point, do you need help? Do you need partners? He said, well, yeah, I need help getting the loan, and I probably need help getting the down payment. And so we brought the lending as far as like helping him get the loan, and we brought the entire down payment. And he did the due diligence. So he inspected the property. He vetted out all the costs. He ran the whole due diligence period, and we split the deal with him. And so we closed it, a month and a half later, got the loan, got the down payment, and he's jumped from having, a quadplex and 2 rental homes to owning, a 34 unit apartment complex, and he owns half of it, which is that alone is going to add probably maybe 1 to 2 million if he holds that over the next 20 years and just pays it down. And so, that's a good chunk of your retirement just from one deal, and he doesn't even own the whole thing.
Wow. So when you're looking at deals, evaluating them, obviously condition of the property, cash flow, all that's important. What kind of cap rate do you look for?
Cap rate doesn't really matter to me. I know that's kind of a weird thing to say as a multifamily guy, but I'm looking at cap rate of what is this thing going to be worth? Like if I do my plan, what's the cap rate for the area, and what can I make it worth with my all-in costs? So what I mean is, let's say I buy this property in Ohio. We're talking maybe a 7 cap area. So kind of high, not really super desirable area, but not horrible. And the rents were extremely low, $450, $500. The net operating income was pretty low, but the property was in great shape. So when you look at the numbers and you look at the cap rate of what we paid, which was 1.3 million, I was paying lower than a cap or lower than a 7. I was paying like a 5 cap. You don't want to pay a 5 cap in Ohio, but I didn't care because I knew that with minimal renovations, I could get the rents to $750. I could increase the net operating income, and I can improve this property. We ended up like getting it at about a 15 cap, is where when we're stabilized and it's refinanced and it's appraised at a 7 cap, our basis is going to be more like a 15 cap. So, anything over, 9, 10 of where I'm going to be all in stabilized, I'm absolutely buying that every time.
All right. That makes total sense. So it's really what you would call like a value add deal, huh?
Right. But if you go out there and say, I want to buy 8 caps or 9 caps or 10 caps off existing financial, good luck. You're not going to find, you may find that, but typically you're not going to find that. You got to make the 10 cap happen by, you're going to add washers and dryers. You're going to renovate. You're going to, do a utility build back system. You're going to be able to add a couple extra units in the, office or whatever it is that you're going to do. you're going to do some short-term leases, you have to have a plan to get that NOI to where the deal makes sense, especially with the debt going up.
Mm-hmm. All right. Well, sounds like a very creative, innovative approach to things. I've heard similar, and results all speak for themselves. Hey, people want to find out more about what you're doing, Jennings, and connect with you. You go to the Facebook group and website?
I mean, the easiest way is just go to Jennings Smith Jr., JenningsSmithJr.com. That has the Facebook group. It has the deal room. It has my podcast. It has everything that they could ever want to know about me, right in one spot.
Very cool. All right. Well, there'll be a link in the show notes to your site, Jennings. And while you're at the site, financialsurvivalnetwork.com, sign up for your free newsletter. And while you're at it, if you got a question for Jennings, myself on anything that we do here on FSN, just shoot me an email, kl@kerrylutz.com. We'll get you an answer very quickly, promise you that. And hey, let us know what's your feelings about real estate. Are you looking to get into it? Are you waiting? And if you're waiting, why? And what do you think you need to do to get into it? Just let us know. You can do that on the YouTube channel as well. And interested to see what all of you have to say. Jennings, thanks so much for coming on. Glad we finally connected.
Yeah, thanks, Kerry. It was a lot of fun. Great show.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.